Hello and welcome back to the trading course. Today we'll be talking about types of charts within the Forex and other trading markets. Now it's important to note that there's lots of different types of charting software and charting tools out there. Generally we like to use the MetaTrader or CTrader platforms when it comes to trading Forex. There's also three main types of charts. So there's the bar chart, the candlestick chart, and the line chart. Now, I generally find that people are familiar with line charts and bar charts, as we sometimes learn about those at university or in other educational facilities, but the candlestick chart isn't often taught, and this is actually the most popular type of chart for us as technical analysts. So let's take a look further in detail at a bar chart. Here we have an example of what a bar chart might look like in your trading software. We've got the time, which is always represented generally down the bottom on the horizontal or x-axis, and then we've got price on the vertical or y-axis. And this is pretty much always going to be the same no matter what type of chart we are using, whether it be line, bar, or candlestick. All softwares will generally use a time on the bottom, price on the vertical. So what does the OHLC stand for? O stands for open price. So this means the price that the actual bar is opened at, and you can see it's represented by this little twig off the bar. H stands for the high price, so this is the highest point that the price has reached during the bar's time. L stands for low price, so it's the lowest point that the bar or price has reached during the bar. And C stands for close price, so it's the price that the actual bar has closed at that time. So if we were looking at an hour bar, it would mean that during that hour it's opened here, it's reached the high, price has reached the high at this point, a low at some point, but it's actually closed at this price. So at the end of that hour bar, it's closed at this price. So here we have an example I've simplified a little bit just to see bullish bars and bearish bars. So I've made the bullish bars green and the bearish bars red. So what a bearish bar means is it means the closed price is less than the open price. So if we take a look at this one on the right hand side, we can see the open is open here on the left at a higher price than the close, which is closed lower than the open price. And that means that it's a bearish bar. A bullish bar means the closed price is greater than the open price. So if we take any example here of a green one, we can see here on the left hand side, the open and then the close is higher than the open. Therefore, it means that price is going up and it's a bullish bar. Here's a Euro USD real life example of how a chart might look. This is taken from the MetaTrader platform, and you can see we have time down the bottom here, and then we've got price on the vertical. And you can see all of the bullish green bars and the bearish red bars. You'll also notice this black bar here. And this is a representation of when price is opened and closed at the exact same price within that time frame. So here we have daily, so that means that it opened the day at that price and it closed the day at this price. It's not that often you see it, but when you do see it, generally most charting softwares will show it as a slightly different color. So it may be black, it may be yellow or white, it just depends on the charting software that you're using and the template you're using at the time. Let's take a look at candlestick charts now. Again, no matter what charting software you're using, you'll always see the time represented down the bottom and the price on the vertical. Here we have candle charts, and we can see here that a candlestick uses the same principle. So open, high, low, and close. Let's simplify it down to a green body. So we can see here that the open on the left, and if the close is higher than the open, then that would be a bullish candle. And if the open here on the left, and if the open is higher than the close, then that means it's a bearish candle. So what are these all called? Because obviously it looks a little bit different. Well, we've got the body, which is the bit formed from the open to the close, and then we've got the upper shadow and the lower shadow. And these are formed when price has reached these points but not closed at the highest point, or the lowest point. So it's kind of like a candlestick. If you were burning a candlestick and you're burning it down, you always hit the wick higher, or the wick or the upper shadow higher than obviously where the current candle is at. And that's pretty much where the idea kind of came from. But it's a more visual representation of a bar chart. That's really what candle charts are. It was a more visual idea, and I think it came from Japan originally. But it's actually a lot easier to see. So generally people will keep candle charts on because it's much cleaner and easier to see when you put colors on it, to whether you've got a bearish candle or a bullish candle. So speaking of bearish and bullish, it's the same principle. The close price for a bearish candle is less than the open price. So again, open price over here on the left, close price over here on the right. Then we have the bullish candle where the close price is greater than the open price. So open price on the left, close price on the right, and it's going up. So of course, bullish candle in this case. We take a look at the same Euro USD example. We've got a series of bullish candles, bearish candles, and the one outlier candle, which is just represented by two large, long, like high shadow and lower shadow, and then a very small body. So it's like a compression of price because price is opened and closed at the same point. So let's take a look at line charts, which are probably the most simple type of chart. So here's an example of a line chart. Again, you'll have time on the bottom, price on the vertical or y-axis. And line charts are actually formed by a single price. So that means they're only formed by a closed price for that single period. So it just represents the close price of whatever that period may be. So let's say today, it would be the close price of that day. Here we have the Euro USD daily line chart, which is a representation of that last previous example, and you can see how different it looks. It's much more basic. Sometimes when we're trying to look at trend or something like that, we may look at a line chart because it's so clear what's really happening. And we could see here that for a long time the market was going up. It did have a pullback, but it kept going up, and at all points during here it looked like the market was potentially in a bullish run or bullish trend. Now of course we're seeing it come down, but it just cleans it up. So if you're ever unsure of particularly looking at a trend, it may be worthwhile taking your trades and having a look at them on a line chart and seeing whether you're seeing that progressive movement. So in summary, bar charts use the same open, high, low, close for prices. Candle charts also use it, but they're a lot more visual. And then line charts will only use one price, so normally the close. That concludes the video for today, and we'll see you in the next video.